So, hello everyone. Here we go for another one of these Substack videos. No trade calls or recommendations or responsible own stuff. We're here for educational purpose only. So, since South Korea and the Kospi is all the rage, I thought we'd take a look at EWY. This is what most people will be trading, just looking at some levels here and how high would be reading the action. So, basically, what we're seeing here, we're seeing kind of a stall at highs. Of course, we've seen explosive moves, but we've seen action getting more and more wobbly, right? So what I would be focusing on here is this recent action, and especially today on the day close at the 180 level, this whole area. And basically what this level does is basically, this is kind of protecting this whole series of higher highs and higher lows, even though it's severely under pressure. But basically, if we can't hold and we get a day close below that 180, I wouldn't be surprised to see a very quick flush all the way back into this previous all-time high, back into the 155, which is going to be the next pivotal level. Now, again, if this takes a little bit of time and we kind of hover here, we sell, we kind of hover, you'll probably see that 200 DMA coming in here, converging around this 155, and therefore increasing the importance of that level with a confluence of technical factors there. But right now, in the shorter term, I think the two levels that you need to keep in mind is, again, 180 and 155. These are the two bull bear lines. It's really hard to get aggressively short as long as we're trading above, even though the action seems a little bit wobbly and you get a lot of velocity to the downside. But as long as this whole area is protected, it's really hard to get extremely bearish. This could be consolidation. Sometimes markets correct sideways to go higher. This could be distribution, but it's a hard call. If we get daily closes below the 180, then that becomes a lot more, let's say, higher odds that we have the potential to hit an air pocket and flush all the way back to the 155 and this whole area. Now, interestingly enough, if we come back down here and we take a little bit of time holding here, you'll probably see the 200 DMA starting to converge here, which will add technical significance to this 155. But in terms of a bigger picture view, of course, we've got more earnings season is going to kick off in a couple of weeks. Something which I think everybody has to keep in mind is that if we zoom out a little bit from this chart, right, and we look at this, explosive move higher, which we've seen basically since those April 2025 lows, where we've gone all the way into the recent all-time highs. The 50 back right now currently of this whole move is sitting around this, sitting around where the 200 DMA is coming in. It's currently sitting at, 135. The 200 DMA is coming in at about 128. And again, this is also a tricky one to look at because, of course, it's just going to react the following day based on what Cosby did. But here, I think what is important in terms of the bigger picture view is that if we can't hold above this 180 mark, and especially if we get a little bit of downside traction in general in the sector post earnings, I wouldn't be surprised to see this come all the way back into the 130 zone. Now, keep in mind that may seem, even from yesterday's close, that may seem a huge move. That's about 30%. But don't forget that just this year, let me just get the right tool. This year, we rallied to those highs 117%, and we've been having huge moves. So even in the context of a 30% correction from here, this is still holding the bullish rotation. This is still holding an awful lot of bullish structure. So I wouldn't get overtly bearish. But I think here also, if you think about it seasonally, you're going into especially after mid-July, the summer months, August, September, we had a seasonally weaker period. It's something to keep in mind. I think I'd be very, very careful here. And again, it doesn't mean that the whole market is going to crumble. You could easily see some kind of rotation out of semis, out of South Korea, out of YOLO names, out of AI, and that why I'm staying pumped. Maybe flows going into Russell or in general value in general, or even redistributing inside the sector. But I think here you have to be very, very careful, especially going through this seasonal period if it starts to lose this 180 mark. To the upside, I mean, of course, if you're looking at that FIB move, next targets would be about 260, but I think you don't really need any upside targets. If this somehow manages to break those highs, you're probably going to see another stupid kind of move like this. So any new high is possible. For those who like to have targets, I'd be looking at, 260s as the 123 extension, 306 as the 150 extension. But right here, I'd be more focused on what happens here, with a lot of participants saying, well, sometimes markets correct sideways and they expect this to hold and this to correct and start another huge leg higher, and other people saying, no, here this is distributive, and this is just the start of what's going to be a little bigger unwind. As usual, let the levels guide. So in that respect, what you would say, if you're plotting these all-time highs and this 180 right here, it's much to do about nothing. Basically, you'd have to say it's neutral to greenish kind of action. If we flush and we close below that 180, then this starts to flash amber, and especially, below the 155, then that's, flashing red, because then there's a strong need for the bulls to catch it here. Then something drastic has happened, but we're far from being there. So that's the way I'm looking at it. Hope this was useful. Wishing everybody an awesome one. Talk to you guys soon. Take care. Bye-bye.